Hey, welcome back, everyone. Tom from Park Avenue Trading, your chief dealer, keeping you sane in these insane markets with a lesson on Forex. What's the difference between a trend and a slope? And I'm redoing the video because the first video I did had no sound. I had my mic on mute. So wasn't that just a brilliant thing to do? All right, so what we're going to be going over in this video is the difference between what a slope is and what a trend is. And the most important thing I'm going to try to hammer home in this video is that in a downward moving trend, you can have upward moving slopes. In an upward moving trend, you can have downward moving slopes. And we're going to define what structure basically determines whether or not a marketplace is changing direction, changing slope, and also then trend changing. And then on the next video going forward, I'll be able to go over like a Fibonacci sequence for you. So, all right, so I got the Australia-Japanese yen up, a 12-hour chart, and I'm just going to define a point. I'm gonna go back in time, and I'm going to look for a market that is in an upward moving market. Now, at this time, I wouldn't know, that this is all going to occur. But what I'm looking for is, I would be using significant point to say, okay, that's a fib level or something. But now, what actually tells me that the marketplace is potentially changing direction, not changing trend, changing direction, is if I take these two bars right here, right off of this, I'll take these two guys right there. Oops. Go down here, go down there. This pattern, two higher highs in a row, basically is what's known for me, what I call a consolidation pattern. Like, in other words, this bottom should hold. I also use it with a technique that I call top lock, bottom lock. I think I gave you guys that on a video. But really, that was the genesis of the pattern was two higher highs in a row. The close doesn't really mean that much. It's basically two higher highs in a row. That would basically say the marketplace is changing direction. Okay, so now when we get this, all right, you notice this point right there is right now the demarcation line. So if the market was to break through that point, means the market is then going to revisit the lower momentum. So market was coming down. We had a slight upward slope. If it breaks this, that means it's still heading lower. Okay, that's all that this is saying. That line is basically telling us that the marketplace is changing direction downward. Now, the most important part in this 12 hours is this high right here. I'm going to put a line on it right here, okay? Because we could say right now that the marketplace is in a downward movement right here, downward movement, easy to see. Now, as soon as it turns up, it is a downward movement with an upward slope, as long as this line does not get broken. Okay, so this would be the top of the market, right? Let's put this down here. This would be the top that we would be concerned with to basically say that the market's rejecting this price up here. It's still in a downward movement until it breaks. Once it breaks this top, it's changing from a downward movement to an upward movement. Okay, now what do we need for an upward movement above this level? We need basically the same type of thing that you see here, two higher highs in a row, and you get it right here, two higher highs in a row. So that's basically telling you trend is changing, okay? And this level should act as support for the time being. So you could see that you could look for low risk trades, using this technique, and this is what I'm trying to hammer home for you guys. So let's go over here. Let's get rid of this stuff. This way it's not in our way anymore. So what did I just tell you? I said that you're going to be able to determine when a marketplace is in a range, right? You could call it anything you want, right? I mean, right now this has been a downward movement. Once we get these two bars, two higher highs in a row, marketplace is changing slope. It's not changing trend. It's changing slope, potentially. Okay, it doesn't always work, all right? Because look, if we notice right here, we get two lower lows in a row, right? So if you were a bear on the marketplace, you would have liked to seen that, and you'd like to see this top hold. But once the market does not break the main support point at 93.52, so this gave you the indication that this level would be a good level of support to look for a low risk buy at. Then once you know that you break this top at 95.66, you should be well on your way, potentially up to this top. And you would use fib levels. You know, you could measure this, and like I said, I'm going to do another video on it. But you could look for the 0.82 level between 618 and 0.82 to see what the marketplace is doing, because that's what's known as a coffin box. Generally, if a trend is going to turn around again and break a bottom, generally all upward movements or even downward movements, you know, they basically fail in that area and turn in that area. So 0.618 to 0.82 is what a coffin box is. All right. So now hang on a second here. Let me just collect my thoughts. So just recapping, we had a downward moving market. We had this as a slope change to an upward moving slope. It needed to hold this point. It spiked through this point. This would give us the first indication, potentially, that the marketplace is going up. Here's the big fake out, right? Two downward movements, and then a reversal of two, higher highs right there. So there's always a lot of chop. But the most important point to look at, and I always say that if a marketplace does this, it's like a crack in the glass. It's the first indication that there are some buyers out there and they're hiding themselves. So you could have done, this break could have been an indication of you to try to get long someplace. So now let's just move forward with the idea, okay? So above this line, we would need two higher highs. So we get really 1, 2 right here. So remember, this is a 12-hour chart. So at that point, it's saying that this area should be a good area for support, okay? It did come down through it. It was basically a head fake, came back up through it. So this is where the marketplace started riding this area of congestion right here. So now you could actually take a level and put it up here, because that's your new level of resistance if you want. But I already have one that's up here. So I'm going to just play with this marketplace right here. So here we're coming. Actually, I will. I'll put a line up there. Right here is a level that we need to get through to continue higher, okay? So marketplace comes up. It breaks through this. What do I need after this? I need, two higher highs after this. And we're not getting it, right? No, we're not. All right, so marketplace is still consolidating. Bang. 1, 2. Going right up to the next level that I had at 102.43. So these are tight levels. You got 101.40, you got 102.43. This is a rejection, right? We got down, down. So this is basically saying this top should hold. What's the level, the first level that really needs to break? Well, I could go back down and I could put this down to this area right here and say, I got to break 98.01 in order to really show that I'm in a downward trend. This is still an upward trend right now with a downward movement. So I'm trying to hammer that home. Okay, so we're in an upward trend right now, and now we have a slight downward movement. It's not a trend change. It's just natural reaction that's occurring in the marketplace. So, and also, as I'm thinking about this, if you have any questions, just leave them for me in the comments. If you want me to email you back, email me at tom@parkavenuetrading.com. I'd be happy to talk to you about it. So this is what the market's telling. Right now we're in an upward trending market with a downward basis right now. That's all, downward slope. So let's move forward, okay? Let's see what, since I don't know what's going to happen myself. Let's go over to here. Market's actually traveling down. Again, we're still in an upward moving market, downward basis. This is the point that would have to break to say that we're changing from uptrend to downtrend. And at that point, you'd need two lower lows below this to actually confirm it. Okay. So, and here we go. We got one, we broke it, warning sign. warning. Okay, so 1, 2, right? So you got this, you got this, this. This is saying downward movement now. It's changed. The trend has changed from upward to downward. So let's move it forward. You go. It retraces right back to that level. This is still a debt now. Here we go. This is a downward moving market with an up slope. It hasn't broken this top yet. So it's still a downward moving market in an up slope. So again, this is where you could use fib levels, and I'll be going over that in a later, next video or something like that. I'm just trying to take it one step at a time. And here we go. All right, we got the breakout above. We got one. We need 2 consecutive higher highs above this. I don't know if I would consider it, but it is there. And here we go. We got 1. And here's a change. This would be basically saying that we're moving from downtrend back to uptrend. So what I would do is I would go here and put the line there. I'd move my top to there. So we are in now an upward moving market with a down slope again. Now it's acting as resistance. Trend change, going lower. Not much lower, but going lower. New level, you could put up over here. Got to spike up. Don't got 2 higher highs yet. Still downward moving market, upward slope. And then right now we could actually mark that as a bottom and start the whole process over. But that's the idea. So the trend is defined by previous tops of valleys and bottoms of valleys, right? So you could look at this as one valley. Look at this. We could say this is a valley. Okay? Let's just go like that. This whole area is a valley. Okay? So this marketplace is still in a downward moving market because we broke this level up here. Downward moving market. Now we're getting an upslope. If it cannot take out this 97.41, okay, you could see all the low risk sales that you have because you know where the stop is, right? You know you need 2 consecutive 2 consecutive higher highs above this. But you could see that you could take fib trades based off of it and get some nice points off of it, like 95.73 down to 93.15. That's not a bad trade, right? Remember I said this is a 12-hour chart. And look, boom, once we break this, it was still working. Downward moving market, upward moving slope, and then boom, crash. Nice movement down. All right. So like I said, if you have any questions about this, please feel free to ask. And sorry about the first video. And I'll put this one up for you as soon as possible. Cheers.